All right, guys, good morning. Good morning. Make sure this is on. All right, testing, testing. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time. Let's go ahead and get started here. Let's go and bring up Thinkorswim. All right, so let's go ahead and take a look at futures this morning. Dow is down 94. It was flat this morning after the unemployment claims number came out. Nasdaq was green about 5 minutes ago, down 20 points. S&P down 12.32%, was down a lot more. We were down as much as about 0.6% or so. We're at 37.63. We are now at 37.81. So relatively flat-ish for this volatile market. Russell 2017 61 this morning, down 0.38%. Crude oil basically flat. I mean, again, kind of hovering around that 85 seems to be that magic level. 85 is marked on yellow bottom left-hand panel of your screen. Uh, even with OPEC cuts and all that, I believe JPM raised their Brent crude target for the end of the year to 110. So again, crude is priced a little higher than WTI, which is what we trade. WTI is the CL symbol. Excuse me. Nasdaq natural gas futures up 0.17%. Gasoline futures are down 0.26%, 266 gallon. Gold futures flat, 1721. Silver futures up 0.13%. Regarding gold, I had that question this morning from Investment Club asking me, what do I think about gold? I actually think gold is not the best investment in the world, but there's a lot of people who are still into, being a gold bug, owning that. I kind of equate gold investing in a sense to like any other kind of different asset class that's not very liquid, but gold is liquid obviously, but like I kind of picture like art, maybe collectibles in that sense. We all know now, even with this high inflation environment, that gold has not done well, so it is not an inflation hedge. It was in the 80s, but after that not so much. You could see now, if we go ahead and expand this screen, I just want to touch on this again. We're above the 200 MA on the weekly, 200 MA on the weekly on S&P held. So at least that's a really good target there. Again, if you're looking to buy gold, I would say this is probably the area to do it, right around 1686, 1721 an ounce. But again, it's very similar to any of these other alternative investments, art, sneakers. I don't consider sneakers an investment personally. But again, there's different kinds out there, whether it's sport cards or stuff like that, or cars. But yeah, we know now that this is not an inflationary hedge. The dollar has outperformed it, and gold is really just a kind of holding in of an asset of value. So if you're buying gold thinking that you're going to get wealthy owning gold, you're not. It's not going to have that kind of return the way stocks do. But again, is it relatively safe? Well, the saying goes, it's never been worth zero. So take that as you will. Not my favorite type of investment, but it is liquid. So again, you can sell it. I bought mine on APMEX, APMEX. This is not an ad. It's just a website that I use. Feel free to use it. If you want to sell there, you can too. They do buy back gold, silver, whatever you buy. So I think it's kind of cool. You buy it through their website and then you could sell it through the same website. I mean, how easy is that? Kind of like an exchange in a sense. So again, not a huge gold fan. I didn't want to come here just to knock down gold, but I did want to say that point. Let's go ahead and take a look at euro dollar this morning on Forex side. 98.51 down about 33 pips. Dollar yen 144.82, up about 14 pips. Pound dollar this morning down about 85 pips, 112.43. Bitcoin above 20,000, still holding firm. That log chart of 18,300 support. I think I have that chart here on Bitcoin on my Bloomberg. Let's go and take a look at that 1 year trend line. Let me see. Here we go. Here's the log. I made this chart on the 24th of July, and I think that's when we bought. That's what we did. We posted that on Instagram. That's where I added to my position. And again, you could see that trend line. This is the log chart still holding up. You could see that we're pretty much holding that support, 18.3 being the level that it was. Now, again, as long as the time goes, the trend line gets higher. It's still sitting on that trend line of around 20,000 at this current reading. Let's go ahead and talk here. Ethereum up 1%, 1360. So again, some risk assets are getting bid. this morning. Now we're starting to get an acceleration to the downside on futures. S&P futures at least 37.80 currently. Let's go ahead and talk the dollar. Let's go bring up the Dixie dollar index this morning, up about 0.5%. We know that dollar and stocks are moving inversely now. We did have a nice bounce back throughout the day. It was caused by a big options position, a bullish options position. Take a look at the details on it on Instagram. I posted that from Bloomberg. Check it out. Looks like a possible double top or starting to hit some kind of resistance on the dollar, at least on the 1 hour. You could call it here right around 111.85 or so. We'll place an alert there, 111.85 as the resistance. If that does break, then we do expect equities to be affected, at least to the downside. And if we bring up the dollar, remember yesterday we talked about that 50-day MA. We traded yesterday NVIDIA. We traded Apple off that MA on S&P futures being correlated with these lower beta moves, lower beta stocks like an Apple that moves very close to the S&P since it's the largest holding of it. Again, 37.40, 37.30, still your support there until you start breaking that. Shorting here isn't the best move, in my opinion, unless you're really trying to just get under it. 38.20 was our high overnight. Again, if we do break that, then I would take a look at possibly going long again to 3,900 being our target, which is what we explained on this chart on S&P. S&P spot. Remember, S&P futures are a little different. But again, 3,900 being our target is what we're looking for. Again, 3,900, 38.75. I'm okay with that 20-point offset. But again, we're watching for this trend line to hold here. Again, could this be the resistance that we expect? Sure. Could it break above it? Absolutely. But we didn't in September. So again, we're going to see if that, is that still respected. But for right now, the only downside really risk you have here is really based on bonds and dollar. Dollars being up. We put an alert there. But there is a gap to fill here on SPX right around 37.04. So again, that is some kind of risk to any kind of positions to the upside. I think that would be a decent target if we started getting to around 37.30 or so. Wouldn't be a ton of room, but again, it gives you some kind of room maybe to catch some momentum. I put 38.44 being that's kind of relatively the high that we had about 2 Thursdays ago. I'll go ahead and move it here to around 38.38. If that does break, again, you have 38.17. Let's go ahead and do 38.24 on S&P, 38.25. That'll be higher than overnight highs and still higher than about 2 Thursdays ago. So again, it could be a double top here as we see, but again, if we break above it, 3,900 is my target. That's where I'll probably be going long on futures or adding position long on futures. Start possibly trading SPY 390 calls or so. So again, 38.25 or so, we'll call that 383 SPY. I will probably go 390 SPYs there. That would be my target for next week. Next Monday is Columbus Day. The market is still open. So we don't have any worries about being a short week or anything, at least in that regard. Let's go ahead and talk bond yields relatively quickly. We'll have the last 3 days of this here. And you could see just upside recovery for the 10-year. Yet equities are still finding their traction, near the highs of the week. So the 2-year rejecting here a little bit, right around 41772. Really, the level we're looking for is below 4. If we can get some really continuation to 3,900, as we spoke about, 420 being your resistance, at least in the short term. If we start breaking above 420 on the 2-year, then I expect the dollar to break the level that we were looking for, which is, I believe, 111.85, 112. If that does happen, then we should get below this 100-day moving average on S&P of around 37.22. Let's go and take a look at our alert that we placed. 38.25 is where our alert is. We did reject the 20 MA pretty much to the T on the daily on S&P futures. So again, we have a lot of kind of cross currents here. We had a nice bounce off an unemployment number claims that were more than expected. So we're probably seeing a little bit of more pressure in the labor markets, which brings down wages, brings down inflation. All things are healed, at least in that sense. The only problem is that we're getting into the holiday season. We know that we have seasonal employment. Amazon is hiring some workers, they were saying on Twitter. Let me see if I could find that exact numbers. 150,000 workers planned to be hired for Amazon. So again, we still have labor strength. That's still a problem in the equity markets. Obviously, with inflation, we don't want to see massive layoffs. Obviously, that doesn't help anybody, but at least in the market sense, that's something what we want. So, and again, bad news is good news is kind of the view in a distorted way in the market because it's all about the Fed. Again, do we really think the Fed is going to keep tightening us into oblivion, or are they going to go ahead and pivot? Traders for 2023 rate hikes or 2023 rate path, they're expecting cuts. So that's already been priced in. We don't have a FOMC meeting this month. We'll have one next month, but we'll have CPI, I believe, next week. So it doesn't hurt to go ahead and look ahead for next week. Monday, nothing going on. Tuesday, nothing going on. So that's good. I'll be out of town this weekend. Tuesday, I will be back in the office late afternoon. No, I'll be back Tuesday evening, Wednesday, ready to go, which is great because that's when we have PPI, a 10-year bond auction, FOMC meeting minutes, and then we have a CPI month over month on Thursday. So, and then retail sales on Friday. So that's all next week. Not a short week. We still got some work to do. And again, right now it is still a waiting game. We're just trying to play our technicals and see where the dollar and the bond market uh, kind of lead us to. SPY, if it makes a lower high, we're going down again. Absolutely. Again, I've been saying, let's not get too excited. We broke it down yesterday. All the technicals for S&P, the last bear market rally. Again, it's not saying that this is not a good thing that we're up a little bit, but again, heed caution day to day. I would like the dollar to break below 110. I would like the 2 year to break below 4, 2, 3.5 on a 10 until we start getting there and we start breaking some meaningful levels, filling some meaningful gaps. I mean, let's not get too excited, but I agree with you, Sailesh. When does next week mean for us with all that data coming out? What that means for me is one thing: opportunity. That's really it. You're going to get volatility. And if you're a trader, again, volatility is your friend. That's what you want. But if you're an investor, just down the Pepto because you're going to be on a wild ride. So, again, everything is showing where we could get a massive short squeeze. Everything is showing that we can get one more leg down to test the June lows, for example, or even the most relative recent low, which is the 200 MA on S&P, right around 35.60 or so. So uh, really is just going to bring a lot of opportunity, in my opinion. More data, the better, so we can understand the next path of the market. We'll leave it there, guys. I know kind of not much going on, at least with futures, pretty quiet. So we'll see where we go from there. Remember yesterday, futures were red. Market was red for majority of the day. We had that big options trade that came out. Details on Instagram regarding that options trade, a bullish SPY trade, and we recovered very nicely, actually. So again, it seems like the futures market is giving us a little bit of a heads up on what things are going, but things can change relatively quickly. So again, be very nimble, trade decisively, and go from there. Do you think earnings report will be positive? I don't. I don't think they'll be positive because they'll be down because of a strong dollar. The problem is, did we already price that in? That's really the key. Did we price it in? Apple did not have a forecast. A lot of these major companies did not forecast. So again, it's really all on the analysts. Do they break? Do they beat those earnings revisions or earnings expectations? But again, the dollar alone is going to really hit those EPS numbers. Again, we saw that with Nike. Anyone else doing business overseas, the dollar is going to be hurting. Have a great rest of your morning. 21 peeps in here, 4 likes. I know. Just hit the like button if you guys like it. If not, no gun to your head. We'll see you guys tomorrow and have a great rest of your morning. Cheers all.